Happy Monday out there, folks. This is Darius Dale here to present our macro minute for Monday, September 12th, 2022. Starting with asset markets, we have stocks up this morning, commodities up, crypto mixed, dollar down, global bond yields down, market moving headlines. So we got phase four continues in Europe. Recall that phase three is the tighter for longer from a policy standpoint, and phase four is the fiscal response to the inflation in terms of trying to cap prices for energy, trying to sort of support consumer demand with subsidies, et cetera. So the EU, obviously, they had that emergency meeting we talked about last week on Friday. It's likely that they will propose power demand reduction targets, negative for growth, and a rechanneling of part of energy companies' profits to deflect the energy crunch. It's set to propose that members impose an exceptional and temporary levy on companies in oil, gas, coal, and refinery industries per the draft regulation. There's also a proposal to cap excessive, quote unquote, revenue of companies producing power from sources other than gas. So there's some good and some bad in this, obviously, in terms of trying to the windfall profits, trying to siphon that to the consumer and business sector. Positive for demand, obviously negative from the perspective of the markets and the intervention in markets in terms of capping profits. So we'll see how the markets like this. Obviously, the euro really appreciating it this morning. Euro USD up a full percent. That's down 2% month over month. So for now, the currency market is celebrating at least this regulation. Again, it's a draft, so we haven't seen the final proposals yet. Anyway, evidence brewing of a wage price spiral. So this is something we've talked about. There has not been a wage price spiral, at least not yet. But we're seeing U.S. railroad workers may be on strike by the end of the week. Negotiators met through the weekend to hammer out a new contract with unions covering some 57,000 engineers and conductors, and a national work stoppage may cost the economy up to $2 billion a day. So that's a massive deal there. Obviously, we're seeing this with the port of Los Angeles, or the Long Beach port, or whatever, the big one over there in Southern California. There's obviously anything that has anything to do with sort of labor unions, trade groups, et cetera. We're obviously seeing some pretty stalled and lengthy negotiations to be, as part of this sort of inflationary process. So don't expect this to go away as long as we're in this sort of, kind of post-crisis world of higher inflation. You're going to see more and more headlines like this, and it's going to keep the underlying trend of inflation more elevated relative to the 2% target that the Fed is obviously targeting from its price stability mandate. We got a massive week for macro updates, just massive. So we're going to get CPI out of the U.S. Tomorrow. In my opinion, that's probably the biggest data point we're going to get all month in terms of trying to understand the probable path forward for policy, and more importantly, the probable path forward for risk-taking and speculation in financial markets. We talked about this pretty consistently in our research here at 42 Macro about the potentiality for a drain of the reverse repo facility balance to potentially offset, or even more than offset, quantitative tightening as a bullish catalyst for the market. And I think that is something that could be affected, certainly set into motion by the inflation data behaving. So we won't really know what the trend of inflation is, the disinflation process is going to look like, until we get the September report on October 13th. But the report we're going to get tomorrow is going to give us a pretty big clue as to how that trend is likely to form. So we're obviously going to be unpacking that in great detail for 42 Macro subscribers. We got UK CPI Wednesday, as well as US PPI. And then on Thursday, we get business inventories, Empire Manufacturing survey, retail sales, and industrial production, and initial jobless claims all out of the U.S. economy Thursday. So going to get some pretty hard evidence of what I think has become a positive response to the decline in energy prices, at least here domestically. If you look at gasoline prices, I want to say they're down 12 or 13% month over month on a monthly average basis in terms of what we've observed in August relative to July, and that's certainly something that's contributed to positive, sort of incrementally positive data that we've seen out of the consumer side of the economy. China, we get China's hard data as well overnight on Thursday, Friday morning. So we get home sales, retail sales, industrial production, fixed asset investment, and their unemployment rate on Friday morning. That's going to be pretty instructive as it relates to the broader energy sector. And then we get the final readings for Euro area CPI on Friday. And then we get the University of Michigan Consumer Sentiment Report for September on Friday. So in terms of what to look for that in that report is whether or not the sort of longer term inflation projections, the 5 to 10-year forward mean and median inflation projections, if those numbers came down significantly, that would also be a positive data point for the market. So just be aware of that. A lot of stuff coming at you this week. We'll do our best to help you kind of stay abreast of it all. But the reality is, if you really want to understand what it means from a portfolio construction perspective, from an asset allocation perspective, then you're obviously going to have to subscribe. So big movers, Bloomberg Dollar Index minus 0.5% this morning to 2%, plus 2% month over month. I mentioned the euro is up a full percent today. Germany DAX up nearly 2% to down 3% month over month. Bitcoin up 3% to down 8% month over month. And then big move in silver. Silver waking up from the dead, up nearly 5% day over day to down 4% month over month. So getting into the risk management of it all, looking through the prism of our volatility adjusted momentum signals and probable ranges. US dollar index, that's bullish FAMS, bounced off the upper bound of its probable range and has faded pretty sharply, pretty quickly over the last few trading days. Now we're getting close to overbought, 30 basis points of downside versus 2.3% of upside. Gold, bearish FAMS getting close to overbought there, not quite there yet. 10-year nominal treasury yield bullish FAMS in the middle of its range. High yield credit spreads bullish FAMS, those are oversold. So be aware of that. From if you're a credit investor, S&P 500 neutral VAMs in the middle of the range, VIX bearish VAMs in the middle of the range, NASDAQ 100 neutral VAMs in the middle of the range, Russell 2000 neutral VAMs in the middle of the range, Bitcoin bearish VAMs overbought, Ethereum bearish VAMs overbought, Shanghai Composite neutral VAMs middle of the range, WTI crude oil bearish VAMs middle of the range, Ag bearish VAMs getting close to or nearly overbought, not quite there yet. Industrial metals bearish FAMs, same deal as Ag. So with that, Darius Dale presenting our macro minute for Monday, September 12th, 2022. Best of luck out there today and have a wonderful week. Catch you back here tomorrow. Cheers.